Well, AMC price will be hitting $145 by December 17. Well, I don't know, guys, but this is actually what the Zacks analyst looking at the option chain in AMC is referring to. Because when you look at this article published I think it was yesterday, October 11th. Investors in AMC stock need to pay close attention to the stock based on moves in the options market lately. That is because the December 17, 2021, 145 strike price for the call option had some of the highest implied volatility of all equity options today. This is not the first time AMC has one of the highest or the highest implied volatility of all equity options in a specific day, because we saw that before the high run up to the 72 or the 77 pre-market back in June. We saw that, multiple months between January and even June. Now, the big question is, why is really behind this big volume, these big bets? Because options are really no different than bets. Okay, you bet that the share price of an underlying stock of a stock like AMC will be reaching a certain level by a certain time frame, right? So the fact that we have this huge implied volatility, technically it means that lots of investors in the market, lots of people in the market with AMC in the AMC play are betting that it's going to be a huge run up. It can also mean that there is a trade starting to develop in the uptrend. All right. Now, this is what the textbook analysis are telling us about high implied volatility. Now, we all know, and this is not even something new, but just to show you an illustration, back in July 2nd, Iceberg Research told that after 1 month of trading sideways and lots of money lost in call options, focus here on the lots of money lost in call options. Because guys, this is not the first time we talk about this on the channel, on this video. The options play, it's definitely a way of transferring our money in the pockets of the hedges and the short sellers. We've seen that multiple times. They will use this, high volatility in order to pump up the option traders, all right? And then you buy the 80s, the 90s, the 100, 120, 130, 140, 145. But as we get closer to this date, even though we get closer to the share price, in reality, they can just collect the premiums along the way while the share price continues to go down. But here's the catch, because differently to what we've seen, in the past with the options getting pretty much our money dried up, here, whenever, personally, I believe, if AMC price reaches the range of the 80s to the 100s, it will cause a domino effect on the little players, the little short sellers in the play, actually forcing them to cover. Because, if you shorted the stock around $50 or around $70, even though you're making a ton of money now, not really a ton of money, some money, well, at 100 or at 120, we get closer to 140, you are losing almost 100% of your capital. Can you afford it? Can you afford to lose that much money when markets are especially frothy? Look at all the main benchmarks. We are down we're down in red for the third consecutive day because people are freaking out about inflation. So what is it going to be in December? Nobody knows. But the thing is, we should really pay attention to this closely, because not only it can play in our favor, especially if this run-up is pretty quick, which, giving the latest, example or illustration I described, it can happen. But in the meantime, if it goes gradually, it can also give time to the market maker to hedge and cover those positions. But the bottom line is, be really careful with the options play in AMC, because this might be another trap in order to drop our money, because right now the share price is in a consolidation mode, and in order to attract another downtrend, they may be behind this, kind of attracting people to getting into the calls again, making them attractive before putting the rug at the very last minute. So just my 2 cents.